Well, let's look at price from a 1 hour today. So from yesterday, we had PPI numbers, and we had this run higher, trading the high here, to this here, into this one here. For the past few weeks, yesterday with the PPI number, we've made a very significant move above these highs, and if you go into the daily chart, you will find that price is really bullish. But since we're trading momentum, we're gonna look at what the kind of momentum we have right here, and we're gonna be in line with it. So since we had this run higher here, we have an inefficiency here that needs to be filled. And if you can look at what price is doing here, we're kind of like retracing through all this here. So in that case, we have this low that's just been made, and then we have this one here that price can trade to. Now today is Friday. I don't really think we're gonna do a lot of going higher, because this can be the high of the week. So opened up on Monday here. So far the low of the week you can see here is on Tuesday, this afternoon session, and then after Tuesday afternoon session we met this run higher going into CPI. I talked about this run higher, the way price behaves during CPI, and then PPI was expecting also higher prices here, but we had a difficult moment here going into London, and I showcased that yesterday. But we had a consolidation here, and PPA number ran higher, still into this high here and making a new weekly high right here. So I've talked about what I'm expecting now that we have this run here, we have this low that has just been formed in Asia together with this one here. So price can go higher, but in my mind I'm not really thinking that we have to make a new higher high for the week. So we might have a consolidation here because price has done much in this CPI PPI week. Price has done significantly a lot, and we can have just a consolidation here going into the close, and we'll look at that in the weekend, how it has performed. So in that case, I'm looking at a very minor sell side here, this low. We're going to go into a 5-minute chart and see what the kind of momentum that we have here. So this low here, this is yesterday's afternoon session low together with this one here. This one is the one that I'm talking about, and this is the sell side that I'm expecting price to run to, and this low is 30,024.88, and now we are trading at 30,053. So I'm expecting price to run into this low here. So let me put this like this, and you can see the lower prices here. So we opened up 0 GMT, we had this run higher here, and then we had this decline here. This is very important, this inefficiency here. Let's annotate that. And then extend this out to 10. So that is in London right there. That's good. And then this one also, I mean, it's the obvious inefficiencies from Asia that are going to tell us the narrative in this price action. So this is in olive drab, and then extend this to at least 9 right there, and then we're going to annotate that midpoint of the inefficiency. So I've talked about that sell side. That sell side is around that 20 level. So having a sell around the 40 level is significant to facilitate lower prices. So this is not silver, dark gray. Okay, there we go. So we've opened up today at midnight New York, right on this candlestick here. I'm gonna annotate that price now. Done this. Okay. So midnight New York open. We've traded around this inefficiency, and look at, you can see the bodies are staying inside the lower portion of that inefficiency. So all I want to see is a run lower into this low here, and possibly let's look at this 15-minute chart and look at yesterday's, and possibly this low, so that it can try and retrace into this inefficiency here from this high to that low right there. So that can be a target on price. So I'm expecting lower prices. That's my bias, in case you've not caught the idea. And I've explained why I need the bias to be bearish. Price does not really have, it can trade into these relative equal highs and maybe into this inefficiency, but it rather trades lower than have an interest in higher prices. So right there, so that low is 30,025. The exact level is 30,024.88. So that's around, let's call it the 20 level if we go through that sell side. So having a sell at around 40, aiming for those 20 points is a very nice idea to be short. So if we look at the daily chart, I've talked about this week here, how price has been trying to reach into this week, and yesterday we went to it and through it, and then we attacked that buy side on last week on Wednesday's high nicely, and then we closed up on the day. So on the daily chart we are bullish, so we must be careful not to be selling at the daily low today if it does not really have an interest into trading into these lows. So right now we're trading outside that inefficiency. We're trading at that 50 level. So the 750 macro is in place, and we're gonna see whether price has an interest in running the other way, and then we'll start trading lower, or does it have an interest on just lower prices. And the way it's trading here, I believe that we're gonna be interested in only going into the after this low. So that 50 level, I'll take a stab on that 50 level if it trades back into that. Right now we're at 45. Let's look at a 15-minute chart here. And you can see the 15-minute chart, we're trading lower at this run here, and then came back up higher into the range, and now we have a swing high here, and we have a high here again, lower high than this one here, and I'm expecting it to trade into these lows. So right now we've made this wick and this one here. We've opened up a new candlestick here that is this is 45, 745, and then we've made this run lower, and then we've closed out that inefficiency here the second time. So I'm expecting price to start trading into that wick and even lower. So we're trading at 48. If it gets back into that 50 level, I'll be taking on a short, and then I'll be expecting lower prices. So this inefficiency is the only inefficiency here with the narrative today. After we had this run lower here from this inefficiency here, and this run lower. If price had an interest in trading higher, then we could have found, after we opened up mid New York, we could have gone above into this inefficiency here and found support and then started trading into these relative equal highs. But instead, look at the inefficiency here. Price is staying on the lower portion, and now we're stuck around that 47 level. But I want to see it break lower and start trading into this mid part of this week here and the low. This candlestick's low is achieved. So that is 12 points from 50 level. So we're trading at 49. And we're remaining with 1 minute until we start that 755 candlestick. There we go, start a new candlestick. So again, if we touch that 50 level, I mean a sell. So I like the way it's keeping up with trading lower, even with the fact that does not touch that 50 level. Well, there we go. Oh, that's why I like using limit orders. So there we go. I sell at that 50 level. So a deal breaker for this trade here will be if we start trading back into this inefficiency here and close above the point of that inefficiency, and that is that 61 level, then most likely I'll not be interested in that trade. And all I want to see now is a run lower into this week and into this order flow here. Today I don't want to be talking much. I've talked a lot throughout the week. I've talked about how we look for narrative. I've talked about what inefficiencies we look for. I mean, it's the most obvious ones. And I've talked about the momentum, how we determine momentum. I've talked about why price wanna do what it wants to do. And today I just wanna be trading this session. And get the 20 points and call it a session. So we have around 2 minutes to close in on this 1 hour and this 15-minute. And I'm expecting the lower prices to continue into the next hour. So we're trading at 48 now. Very slow price action, and this is the reason why I like trading in this session. You want to be confident that you have momentum behind you, unless it's willing to change its momentum. And I like momentum when it's bearish because I expect faster price action. When momentum is bullish, then I expect some slow movement, but it's gonna move higher. You gotta trust it, right? So we're remaining with less than a minute for that 8 o'clock to come in. There we go. So we ran higher. We've touched the low of that inefficiency. We've touched that opening price. And if it's gonna trade lower, it's going to have no interest in trading into this inefficiency here. So I want to see it trade lower into this candlesticks week. So once again, we've touched that 50 level. We've touched the low portion of this inefficiency. Again, something that I've been talking about. I don't really want to see it spend time inside that inefficiency. I want to see it move away from it. If it keeps reference, or if it keeps referring to that inefficiency a lot, then we might not as well be bearish, and that might be the daily low. I mean, but today is Friday. I've talked about how I do not really expect price to be moving a lot more higher because we found the high of the week right here, and now it's time to at least get lower into the week and make that something like a TGIF. I see it on TGIF in price action, where the weekly close happens on a retracement of 25 to 30% from the weekly high. And now that we have the weekly high here, right here, let's look at a 4-hour chart to here to look at what that may look like. So from the weekly low here to the weekly high there, from this high to this low, that is OTA, that is 70%, that's around 80%, so that is 20%. So you can see we've not reached around 3,000 and 5.75, we've not reached around that level. So it's interesting to see a price at least trading to that 30,000 flat level, 30,000 level. So that is TGIF, a 30% retracement of the weekly range, and that's what I'm expecting price to do. So we've touched the lower portion of that efficiency. You can see we are trading again into this candlesticks week. So from that 50 level, I'll be expecting 50 level will be nice because those are 20 points. But after it does that, then I'll be expecting price to attack this low. So again, I've said when I'm expecting lower prices, I expect price to move lower, at least faster than when it moves higher. So this low is still a sell side liquidity pool. This is a minor sell side, and then we have this low, and this is the Asian low. Another thing when I like what I like trading about this session is when we open the midnight New York open and price has not really traded into the Asian low or the Asian high, and we have a momentum, then the Asian low is at high risk of being attacked. But there are most of the times when we open so close to that low or high, like we've been doing inside this week, and you find that price trades into that high or low, and then most of the time is it has the ability to kind of like retrace back, like that's what happened yesterday. Let's look at yesterday here. Mid and New York open, this was the candlestick here, and then the Asian highs are here. So after we ran after those Asian highs, it has the ability to retrace back into the range, even though we had this movement higher into that level that we talked about. It has the ability to run lower, and we'll talk about that the weekend. So we've ran lower after this week, and you can see where we've closed. This candlestick low in itself is 36, so we've not reached into that 30 level. So we've not reached into 20 points so far. 30 level is here, so we might as well run after that sell side. And this has been a very nice reaction from that inefficiency. We open up mid and New York opening price. We find weakness. Price trades on the lower portion of that inefficiency with the bodies. You notice that the wicks may trade into that inefficiency, but then we had this decline here. Tries to go once again back into this order flow here. Look at the bodies. Again, we had this push here, and this one here. This is nice. So I want to see it run after this sell side. So we're trading at that 37 level. Wow, look at what I did here today. I'm using 0.05. That does not matter really. What matters is the points that price is gonna be doing. So from that 50 level, I'm expecting 20 points, at least around into 30. So we're gonna be putting a limit order at 20 points. And that's that. So after all, I'm expecting around to that sell side. So I'm still expecting price to trade into this sales, and I've explained why I'm expecting that to happen. So today this 750 macro has come into the marketplace and has pushed price lower. It starts here. Once we close outside that inefficiency, on the second time we trade lower, and then that 8 o'clock candlestick comes in, trades on that inefficiency once more, and then we move lower, and now 20 points right there. And the way it's moving lower like this, fast like this, I'm expecting that sell side to be taken out. This candlestick's low is, the low here is 29.28, so we've not traded into that 28 level, and then it's back up again. If I could have been in on a live account, once it was trading below this candlestick low here, that could be it for me, because we can now have a retracement here, and I've had something like a retracement before, and it has scared the shit out of me, and then I got out of a very nice rewarding trade. But you learn, and this does not really scare you now that you have uh, you have an experience of whatever has happened before, and you're confident of what is going to happen, so you just sit through it. You can see we've traded into that 30 level. The low here is 29. It's trading back up to, and that high is 43. but I'm still expecting that sell side. That's why I'm still patiently waiting for price to trade into that low here. So we've had this retracement here. I like the way the 15-minute has formed a large wick. So I'm expecting price to run over that wick and trade even more lower and continue with the lower prices. Well, I said earlier something that I did not want to see for this trade is If price trades back into this inefficiency and closes on top of this inefficiency, then that is not really, that will not be really be interesting anymore with this trade. But once we trade into that inefficiency here, I'll still be expecting price to start rolling over into this sell side. So we've touched that inefficiency again. And let's see whether they'll price it lower. I've seen price do something like this before, where we are trading and expecting lower prices, and then it goes back up like this. It trades into this, into near my exit, and then goes up again into my entry, and even goes further beyond it, and then later on goes lower. So that's why I'm still sitting through this run higher, because I'm not really scared of shit. I'm expecting lower prices. The momentum is weak, and look at the way we're trading with that inefficiency. So that I'm still keeping that in mind. I'm staying with the bias and I'm trusting it to start rolling over lower. So look at that. We trade into that 50 level again, and it's down to 40. And look at that 15-minute tick, like I said it would. I want to see it roll over through that 15-minute. We can trade that low and that low now that they are relatively equal. So honestly, I did not really want to see it. I did not really want to see it make a reference back into that inefficiency. It's not like we have, but it looks like it's going to. I wanted to see it start trading lower. But I'm still expecting lower prices. Back up again into that 50 level. This inefficiency low is this candlestick's high, and that candlestick's high is 52.5, 52.28. So we've not really gone into 52, but you can see how it's really struggling to get into that level. Honestly, I just want to see lower prices. There we go, we've touched that low again with this new 15-minute, 5-minute candlestick. So what is really going in on my mind is I don't really want to see it trade and close on the upper half of that inefficiency. That will not be nice for lower prices. It can touch that inefficiency here, the lower portion of that inefficiency, but I want to see when it touches it, how it behaves. And you can see we touched it here, pushed lower. We've touched it here, tried to push lower, but it has gained some momentum here and it has touched it again. So it's about time it started to trade away from that inefficiency. If you look at the 1 hour chart here, it's really being compressed inside this price action. But in itself, from yesterday's, this was into this was yesterday's afternoon session. We had this decline here with the swing high, opened up at 0 GMT today, and we've had this two candlestick hit lower, and then now we have very compressed price action on the 1 hour. but with this kind of price action here, I want to see it still trade lower and attack that low. On this 15-minute, we've had a major retracement here, even after trading into these lows. So I've talked about what the deal breaker is on this 5-minute. All we have to do is wait. It has really made a significant move higher, and I talked about if we want to be seeing lower prices, I want to see it move fast. But if it's going to make this move higher, then we might as well move a little bit higher. But when it starts to trade lower, then it will start going there fast. So we're remaining with less than a minute. Then we're going to start a new 15-minute candlestick and a new 5-minute. And with this 15-minute here, I want to see still lower prices before even we start trading higher. So let's watch and see how that 5-minute plays out. So we've touched the low of that inefficiency here. Again, we're trading right there at 50s level. So there we go. We've opened up with the volume imbalance, as you can see it. And look at now the way it's trading lower. Just the way I've said it. If it wants to trade lower, then it will go there fast. So we've opened up for it to go lower, and another retracement here. So honestly, I'm still expecting the lower prices that go with this momentum on the 15-minute. So let's compress this 5-minute and see what we have back here. So other than this sell side, we have this one also. And that one also is also covered up with this inefficiency here. So I'm expecting it to start pulling lower, start dragging itself lower. So it has gone again higher. We've touched again this inefficiency, still keeping up with the fact that it wants to trade lower. I feel like it's fighting for its life for higher prices, but it keeps getting pushed lower. So we're trading at 52 level inside that inefficiency. And on the opening price, so there were a couple of relatively equal highs here with this 5-minute candlesticks, and I think that's what it was trying to facilitate there, and then maybe offer lower prices. So let's see what it will do after we've traded into that. So right there, almost in the middle point of this inefficiency, you can see how it's going through it. So up at 64, and I've said what's most important is where we close with this candlestick here. So you have around 4 minutes to see where it is interested in closing. So we have around 3 minutes. So I don't really like the fact that we opened up with that candlestick here that makes this movement higher. Right there on the opening price, open right there, and then it makes this move higher. That's something that I don't really like. And now that it's gonna close the proportion of that inefficiency, then we might as well be reaching after these relative equal highs here and that inefficiency right there. So from where we had this trade here, that 50 level, the high of this inefficiency is this candlestick, so that is 67. So if it reaches that 67 level, that will be a 17-point drawdown. So something that I can still handle until I see an interest again for price to start trading lower. So we have 2 minutes. So what I'm expecting to see is this candlestick here going to act as a primary to facilitate lower prices. Now that we have this low and this low, these are relatively equal. So we are remaining with less than a minute. And we can open up the next candlestick here and trade above this high here, and even go after this CB here. Wow, we've opened up this new 5 minute, and you can see how it has pushed price lower. That's a nice reaction for lower prices. So I'm going to be expecting lower prices as long as we're trading on the lower portion of that inefficiency. But look at that retracement higher. So I'm still going to trust now that it has done that, and the bodies are inside this inefficiency still, and we did not touch the upper portion of that inefficiency. I'll not be expecting this candlestick here or any other to start trading higher into the upper portion of that inefficiency if we want to go into these lows. That right there is already a deal breaker. Close the close on the proportion of that inefficiency. That's giving me a feedback that it might not be interested in reaching after those lows after all. But I'm expecting something like a swing high here now, and then we'll trade lower. So I'm gonna push this inefficiency out. Let's say that 10. This mid gap. So we've opened up, we push lower. You can see it's pushing itself back up. So trading at that 62 level at 12 points drawdown. So we've not really formed a swing high here like I was expecting, and we still have less than a minute. So that's really more of a deal breaker. You see, we've traded the upper portion of that inefficiency. So why is it going after these highs, and we're trading at that 67 level? So that's really it. I don't want to be staying. We might be as well as running into those relative equal highs. So I'm gonna exit on this trade. So how many points have we lost? We've lost around those 17 points. So from where we've opened up here and I went short at 50 level, I've exited at 69. So those are 19 points. So sometimes that's what trading takes. So you can see here we've closed outside that inefficiency, and by the fact that it has done this, we might as well trade into this inefficiency and these relative equal highs here, that high and this high, and that's buy side. So that high is higher than that one, but they're equal. So what's this? There's a buy side liquidity pull right there, and the fact that we have that inefficiency, we might trade into that high and after that inefficiency. But you can see the body has closed outside that inefficiency. So for that to happen, for that buy side to happen, I want to see it trade on the upper portion of that inefficiency and then run after that buy side. So again today momentum has taken a turn here, and we've gone through that inefficiency, and let's see whether they'll trade it into this buy side. So I'm interested in looking at how price reacts with that inefficiency right there. So that buy side in itself, it's this high is 30,082.03, 30,082. For you to be exiting at 30,082, for you to be exiting at 82, you're looking for 20 points, then your entry must be at around 60 level. The 60 level is around the midpoint of this inefficiency right there. So we're remaining around 2 minutes, then we're gonna have the macro for London coming into place, and we're gonna see what they push price to. They might push it into this buy side, take that buy side out, and then attack that sell side. Price might do that, or they might just leave out that buy side for later use, trade lower, take out that sell side, and then later on attack that buy side. So I'm gonna stay here for the next like for the whole macro, and then that's it. So one thing that we've seen today is you must know how to where to exit on a trade if it's not really viable. How to know how to know where to exit on a trade. I mean, what do you need to see so that you can avoid more drawdown? That's what we've seen here today with this inefficiency. We had a sell here. Look at that trade history. Had a sell here at that 50 level, aiming for that 30 level. I mean, with this all price move here, went into that 30 level. The low here is 29.98. This candlestick low here is 29.28. And then I talked about how I wanted to see the deal breaker for that trade is not to close on the proportion of that inefficiency, and then we close right here. So I did not exit right there on that candlestick here because this candlestick here opened up, and then I was expecting price to start trading lower because we had not still gone outside that inefficiency. And with the fact that it did this here, went outside that inefficiency, then that's a real deal breaker, and that's my exit. So it's not really about winning today, it's about knowing what's the deal breaker for your trade would be if you're really wrong about your entry. So the momentum was bearish. I sold right there at 50 level. I could have exited right there at if it touched 29. I could have exited right there if it touched that 29 level. But then I wanted to wait and see if it has the ability to be weak and trade into that sell side. But you can see the deal breaker is right there on that inefficiency, and right there is the exit on that trade. So because it has done this all this price action here, I've said after we went outside that inefficiency right there, then we're gonna see attack on that buy side. And for you to be able to take your exit at that buy side that's around 80 level, then your exit must be at 60 level. So immediately you closed outside that inefficiency, outside the midpoint of that inefficiency. We opened up here, trade lower through that 60 level, touched the opening price. We had that push higher. And where is it going after? The buy side right there, those relative equal highs. This high is 81.90 and this high is 82.03. So this high is higher than that one. That's why I've annotated it. So we're going to run to that buy side, and I want to see it run to that inefficiency. So we've started the macro that welcomes in the London Open, and we are 2 minutes into it. So majority of the time it does not really behave like this. Now that I mentioned that the momentum is bearish, and the reason why I wanted to see lower prices. Majority of the time the momentum is always the way. But you can see today we've changed again the momentum, and now it's attacking buy side. Now that we were bullish, we were bearish, I mean. So we're so close to that buy side. We're trading at 77 level, 78. So you can see the momentum here. This very nice bullishness here. From that 750 to 810 macro, change in momentum, it's trading higher. It won't be surprising to me that this is the daily low for this day, and we can have much higher prices that go above, not only above this buy side, but also into this high here, and maybe even attack yesterday's high, because in the daily chart we are really bullish. But since it's Friday, I don't really expect that kind of price action. So we're so close. We're trading at 79, and I want to see them attack that buy side with strength. Let's look at the 1 hour chart on this chart here. So you can see the 1 hour chart. This has been the biggest candle in this since we opened up at 0 GMT. We've been trading lower. That's why I was expecting lower prices, but you can see the change in momentum here, and we're running higher after that buy side. So trading at 80 now. This candlestick's high so far is 81.82. This one was at 80, the buy side was at 82. Boom, we've touched it. So that line is out there. So I'm expecting it next to trade into that internal range liquidity pool here. Internal range liquidity. And just on that internal range liquidity, there's these highs here, and that's also buy side. So we've touched that high. So this 850 macro started here, and you can see it's attacking the buy side. So the momentum today has been from Asia. It has been bearish. I was really expecting price to run that Asian low first, and then maybe do something like this, but we came so close to that Asian low. The low here was 30,024.88, and the low here was at 30,029.28. So I'm so close with how many points? 4 points, and then started moving higher. So we've only touched that high, and look at the reaction here now. But if we're really bullish, then I want to see it go through that buy side and trade into that internal range liquidity pool, that inefficient, that CB. So one down close candle here. So I'm expecting price to go through that and trade into that buy side, and then again that high. So I'm gonna stay here for the next 10 minutes or so, and then we're gonna close this up. So actually, after it has taken this buy side, let's take this screenshot. And also this one, so that when we go into the weekend, I'll be talking about what I was expecting and how to expect that change on momentum, and now to know when you are wrong. So we've touched that high. If we're gonna retrace lower here and then expect a continuation for higher prices, I want to see price remain on the upper portion of that inefficiency if at all we touch it. If we still keep up with the lower prices, trade through that inefficiency, then sales idea will be next. Simple. How to read inefficiencies, that's the way. Wow, what a huge decline, right? Back into the inefficiency. So we've opened London here, that 9 o'clock candlestick, and you can see we had this rejection after we merely touched that buy side. We had the rejection here. So it's straight up forward. We close on the lower portion of that inefficiency, then we'll have that attack on sell side. If we don't, then I'll be expecting to see how price trades on the proportion of that inefficiency. So this inefficiency itself, it's acting as a premium or discount array in regarding to where the candlestick close when it's trading at that point and at that time. So while we were trading here, immediately we opened, I was looking at where we close here, and you can see the candles close on the lower portion of that inefficiency. So that's it's keeping itself in a discount in regarding to where it's trading at that time. So after we go outside that inefficiency, then that discount becomes a premium array. So immediately starts trading higher, it's trading into a premium, and the upper portion of that inefficiency, that CB, becomes a more premium. So that's why we had this run here, and then it rejected that and traded into these lows. We traded also that inefficiency once again, and that's why I was looking at how does it react when it trades into that. So it touches that inefficiency here again, start trade lower. Now it's on a premium, we're trading lower. That's why I was expecting price to trade 20 points away from that inefficiency. And look at where we've closed now. So we touch it here, and then it offered this lower pricing from that discount that became a premium now. After it did this here, we failed to go to this sell side because price can do that most of the time. It can do that, not really most of the time, but yeah, most of the time it can do that. Fail to take out that sell side and just trade inside the range. We trade higher, and I called this here now that we've closed on that premium side of that inefficiency, then we might be trading higher and expecting that premium side to act as a discount after we go outside that inefficiency, and then we do this, we close right there outside that inefficiency. So price open, it uses that premium now as a discount to make a run into that buy side, goes there, touches that buy side, and you can see the reaction from that. So again, I've said if we go through that inefficiency and close on the lower portion just like we've done it, my interest again goes into how we react on either side of this inefficiency on the closing basis, but especially how we react on the lower portion. And now that we've done this here and we've gone also on the upper portion of that inefficiency, that's really not this is really a high resistance liquidity run, is and it's not really and it's not like it wants to go to one side of the marketplace consistently. It is just all over the place, and this is the high resistance liquidity run. We don't know whether it's going to run into that sell side or into that buy side. Good inefficiencies, they keep price at bay on one side of that inefficiency, like this one here. After we had this CB, it only touched it once, twice, thrice, and then offered lower prices. That's what we expect of an inefficiency that is high probability. This one here is just low probability, very low probability. One thing is price spends a lot of time inside that inefficiency, so it's not a high probability inefficiency. It spends a lot of time inside the inefficiency. So trading you with the idea of this inefficiency here that is gonna go into a premium and reject, or a discount and reject a premium and go higher, that's gonna be low probability. That's why it goes lower, does not run to that sell side and then goes completely through that inefficiency once again, and then now we are right back at where we started, we were. So I've talked about how to manage losses and where to expect where the deal breaker is. I've talked about the closing price of this candlestick here, and I've talked about the premium and discount side of these inefficiencies and how they react with the buy side and sell side liquidity pools. I was expecting price to run after we've closed out at that inefficiency. I was expecting price to run on that buy side and then try to run into that inefficiency, but after we touch that buy side, you can see we have a dip here. So this is a high resistance liquidity run after all. So look at the close here. I'm interested in when after we close on the lower portion of this, do we trade outside that inefficiency and then start going into this sell side, or does it again go through that inefficiency now that the bodies are inside that inefficiency still? Does it go outside that inefficiency here and then starts again to run into that buy side? So that's something that we'll be looking at off record. So that's it. I'm still waiting for this candlestick here to close. That's the 905. After we opened up London, I said I want to be here until 10 minutes after that. So we are less than a minute into that, and then we're going to close this up. So there we go. So that's really it about this session. Nothing really much. We're gonna look at what price does off record with this buy side or sell side liquidity pools, and with the way it's behaving here, we might just have a consolidation, but that sell side is gonna be out because of the weakness here and the idea of TGIF. So until next time, maybe we'll look at price in the weekend. So until next time, adios.